Restaurant owners, if you're watching this, you might be in the moment where the bills are stacking up. Rent is due, taxes are due, vendors are calling, and payroll is next. Let me tell you something. You're not alone, and you're not stuck. In the next few minutes, I'm going to show you the emergency funding options restaurants actually use, what lenders really look at, how to avoid getting scammed or trapped in bad terms, and how to position your restaurant to get approved fast, even if your last few months were rough. I'm Demetrius Harris, and I help business owners navigate funding options so they can stabilize cash flow and keep the doors open. Before we get into it, like this video, subscribe, and hit the notification bell so you don't miss the funding and business growth content. And if you want funding help for your business, comment business capital and I'll show you the next step. Let's get into it. So, the real emergency, the restaurant cash flow trap. Restaurants don't fail because food is bad. They fail because cash timing is bad. Money comes in daily, but big bills hit in chunks. Rent, payroll, sales tax, payroll tax, vendor invoices, equipment repairs, insurance, one bad week, weather, slow season, staffing issues, event cancellation can create a 30 to 60 day hole. Emergency funding isn't about extra money, it's about buying time and protecting your operation. Step 1. Now I'm going to cover 3 bucket methods. Bucket A, must pay to stay open. 0 to 7 days, rent, lease, payroll, critical vendor, food supply, beverage, utilities. Bucket B, penalties, collection risk, 7 to 21 days, sales tax, payroll tax, back rent, vendor past due notices. Bucket C, stabilize and rebound, 21 to 60 days, marketing, inventory, buffer, repairs, maintenance, hiring, training to increase output. The funding strategy depends on what bucket you're in. Step 2, emergency funding options restaurants actually use. Option 1, working capital, fast liquidity, best for rent, vendor bills, payroll gaps. What lenders look at is monthly revenue, consistency, time in business, often 6 months or more, recent deposits, overdraft behavior. This is often the fastest option when timing is urgent. Option 2, business line of credit, flexibility. This is best for recurring swings and seasonal slowdowns. Why it's powerful? You draw what you need. Helps you avoid repeated applications. Option 3, merchant cash advance. Use with caution. Best for when you need speed and have strong card sales. Warning, speed is real, but you must understand the daily, weekly pull and how it affects cash flow. Option 4, equipment financing. If equipment failure is the emergency, best for replacing ovens, refrigerators, POS systems. Now the benefit is equipment itself helps support the approval. Option 5, invoice vendor terms and negotiation. No funding needed sometimes. Best for buying time, scripts you can say, can you split this invoice into 2 payments over 30 days? If I pay half today, can you hold the rest until Friday? Can you extend terms to net 30, net 45 for the next 60 days? Now, key point. Sometimes the best emergency funding is renegotiating terms while you secure capital. Step 3, what lenders underwrite in an emergency. Here's the approval checklist. Number 1, Time of business, 6 to 12 months is helpful, but options exist. Number 2, monthly revenue. Trend matters more than one bad week. Number 3, bank statements. Usually last 3 to 6 months. Number 4, daily deposit. Consistent deposits equals stronger file. Number 5, overdrafts, non-sufficient fees, too many can hurt. Number 6, existing debt, especially daily, weekly payments. Number 7, tax issues. Not always a deal breaker, but must be disclosed. Number 8, industry stability. Restaurants can qualify, but file must be clean. Lenders are trying to answer one question: can this business comfortably handle the payment while staying open? Step 4, how to use emergency funding the smart way so it doesn't backfire. Now, the right way to use emergency funding is stop the bleeding first. Rent, payroll, critical vendors. Stabilize cash flow. Create a 2 to 4 week buffer. Rebound plan. Use part of capital for revenue producing actions. Revenue producing actions. Here are some examples: local catering outreach, Google reviews push and SEO basics, limited time offers that increase ticket size, delivery platform optimization, lunch specials for consistent weekday volume. Never use emergency funding without a plan to protect cash flow. Funding should relieve pressure, not create a new problem. Step 5, real scenarios best funding match. Scenario A, rent due in 5 days and vendor past due. Now, the best match, working capital or short-term funding and vendor split plan. Scenario B, behind on sales tax and payroll tax. Best match, structure, funding, and payment plan with the state and cash flow cleanup. Scenario C, equipment broke and you're losing sales daily. Best match, equipment financing, fast, and small buffer for inventory. Now, different emergencies require different tools. Now, here's some frequent asked questions. Can I get funded with average credit? Yes. Many programs look more at business revenue and deposits. How fast can funding happen? Sometimes. Some options can be fast when your paperwork is ready and bank activity supports it. What kills approvals? Too many overdrafts, declining revenue with no explanation, and stacking too many daily payments. What do I need to apply? Usually basic business info and recent bank statements. The cleaner your file, the faster it moves. If your restaurant is under pressure right now, rent, taxes, vendor bills, don't wait until the doors are forced shut. The goal is to stabilize cash flow and keep operating while you rebuild. Make sure you like this video, subscribe, and hit the notification bell for more funding and business growth content. And if you need funding for your business, comment business capital. I'll respond with the next step, and I will see you in the next video.